89,000 jobs were created in April. That's the strongest monthly gain in 14 months, most of them full-time and for women. Economists telling me it reflects a growing care economy. The participation rate increased to a near record, meaning more people are in or actively seeking work, which is a sign of confidence about the jobs market. So, those two factors combined means the unemployment rate remained at 4.1%, which is roughly where it's been for more than a year and at a time when the population has been growing.
This is also complemented by the data released yesterday showing that there is real wages growth in the last quarter, but also in the last 18 consecutive months.
Real wages, though, was negative for almost 3 years before that. Still, combined with easing inflation, economists say the Reserve Bank should cut interest rates next week.
The labour market is tight and strong, but it's not generating more excessive wages growth than we think is necessarily something that will concern the RBA. But most importantly, they're looking out to the global economy right now and they're seeing the downside risks to global growth. And we think that'll be the thing that really pushes them over the edge to delivering one more rate cut next week.
The board's two-day meeting begins on Monday. To the Australian share market now, which turned positive after the jobs data was released late morning. The ASX 200 up 0.2%. It means 7 straight sessions of gains. The temporary US-China trade deal adding to confidence, but analysts are still cautious.
When we come to this 90-day deadline, because obviously it's supposed to be a pause, will there be a little bit of nervousness back again? Will there be more deals that come out with other countries like Japan and India and Europe that have still yet to have any kind of real dialogue come out of it?
The IT sector rose the most following gains from tech stocks in the US overnight. BHP fell on a weaker iron ore price. CommBank hit a fresh record today, while insurer IAG climbed on an asset purchase. The energy sector lost ground as Brent crude slumped, dropping more than 2.5% since yesterday. The gold price also under pressure, trading back around $3,150 an ounce. The Australian dollar is down against a greenback at 64 US cents. It's also lower against most of the other major global currencies, including the British pound, and that's as the UK economy grew by a more than expected 0.7% in the first 3 months of the year. The Telecommunications Ombudsman has called out providers for failing to meet their obligations to customers experiencing financial distress. It follows the release of new data highlighting a small drop in overall telco complaints with the same time last year. However, complaints involving financial hardship or repayment arrangements were up 72%. That's despite requirements for them to offer tailored assistance.
We're hearing from customers that when they're contacting their telco to exercise their right to get help, and you do have the right to get help if you're struggling to pay your telco bills, they're not getting the flexibility or the assistance that really reflects what they need. And, these complex circumstances can mean people might have lost a job, be experiencing unexpected medical bills, change in relationship status, all these things that happen to anyone at any point in time.
The largest increase in complaints for consumers over the quarter was for inadequate fault testing, while for small business, they related to poor mobile coverage. 2024 marked another record year for global electric vehicle sales, despite a pullback in some parts of the world. The International Energy Agency says they topped 17 million last year, accounting for more than 20% of the total car market. Most of them, around 11 million, were sold in China. Asia and Latin America also emerged as hotspots, with sales up over 60% year on year. That's in response to policy support and cheaper imports from China. The opposite was true of the US and Europe, as tariffs contributed to slowing sales growth. And falling sales amid cost of living pressures, that global luxury fashion brand Burberry has prompted it to slash nearly 20% of its workforce. That's around 1,700 people. It's part of a plan to save around $200 million over the next 2 years as it tries to reposition itself as an even more premium brand. It comes as another global company, Microsoft, said yesterday it would cut 6,000 jobs as part of a corporate restructure.